Hello, Oracles. Well, this has been extremely exciting as a Tesla stock shareholder. We have seen the stock price soar from that 218 level all the way up to as high as $358. Extremely exciting times. Now, we did see a cool off today of about 6%, so that was kind of natural after we saw a massive run up as we did. The question is, do we cool off more from here and come down, or do we go back up and perhaps test $400 and maybe all-time highs at that $414 level? Well, we're going to discuss a bunch of that today. We're going to take a look at those gaps that we have down below us because, as you guys know, I've been tracking gaps for quite a while, and 9 out of 10 times gaps do get filled. Now, for you guys who don't know, a gap is when a stock price opens higher or lower than where it closed the day before. So Tesla, for instance, closed at $218 and then it opened at $238, thereby creating a $20 gap. Those gaps fill 9 out of 10 times. Now, typically, when it's a fundamental jump or there's something significant that is moving the stock forward, it may not fill. There's some reasons why it doesn't, but more often than not, it will fill those gaps. We saw that happen back in 2022, where we had a whole lot of gaps to fill all the way down to that $110 level, and nobody thought that they were going to get filled. People were insane even thinking that the $244 gap was going to get filled. But sure enough, every single gap got filled all the way down to that $100 level. So don't think that this time is going to be different. Don't think that we will not fill these gaps down below us, especially because of the reason why we ran up. Had nothing to do with fundamentals this time around. This was strictly an emotional run up based upon sentiment after Trump winning the election because of a lot of reasons with Elon talking with Trump, possible regulations, a lot of different reasons why this ran up. There's a lot of other stocks as well that did extremely well post election, and all of those are most likely going to cool off. They all cooled off today. Chances are every one of those gaps that were created are going to get filled. Now, the question is, when are they going to get filled? Well, before we get into all that, just please make sure you hit that like button down below and subscribe to the channel. I really appreciate all of that support. All right, so here we go. We're going to start looking at these gaps. Now, again, we did create a gap here. And again, look at these levels that I've had drawn forever. 326, it jumped all the way up to this $348 level. That created a gap. And that gap got filled today. So the most recent gap that we had, which was created yesterday, has been filled today. So now the question is going to be, what other gaps do we have? Well, we have this gap all the way down here to $255, and then another gap down to that 218 that I had mentioned earlier. So these two gaps here are most likely going to get filled. And then if we trend further back, you can go back to earlier this year, and you can see back around April, we had a gap here created at 147. Now we had a gap at 146. We came down and we filled that gap, and I had called that one. Nobody thought it was possible because we were at $260. We came down, we filled that gap at 146. And typically we push a little bit higher or lower when gaps are getting filled. And this time here, we did end up going down a little bit further. We hit that 140 level and then came back up, but we created this gap at 147. Now, again, everybody's thinking, well, that gap is really old. Well, guess what? The gaps that we filled in 2022 were 2 years old, and we still came down and filled them. So don't think for a minute that we are not going to come down and fill these gaps. So looking at those three gaps, those are the three main gaps that I want to look at today. Now, there are some that go down below the $147 level, but for right now, until we get down to those levels, if we get there, of course, there's no guarantee that we will get down there, but if we get down to those levels, then we'll start looking a little bit lower. But as of right now, I want to focus on the two that were created most recently and then that 147. And I know a lot of people, I don't want to squash the excitement. Yes, this is super exciting that the stock is running as much as it is, but you got to be realistic. And I know people hate me when I say this and all these things like that. And, people are like, oh, Tesla's coming back to where it should be trading at. And Tesla's PE is still extremely high right now. We saw a nice fundamental push up after the Q3 earnings. That was really nice. But we always get that over exaggeration and that emotional swing that pushes it forward a lot higher than it really should be. And that's why people get so swept up. And then you get FOMO that gets involved. And then you have people that are buying at the top of the stock price when it's extremely overvalued. And then the stock ends up selling off. And you've got these people holding the bags because they bought in emotionally. I want to take the emotions out, on both sides of the thing, because you guys who have been with me for a while know full well that when the stock price was selling off really low, I kept on saying, hey, it's okay. We will hit a bottom. The stock will rebound. Sure enough, look at us. We just rebounded. So anybody who bought in the last 2 years has now become positive on the stock. It happened. We broke that $314 level that we could not break over the last 3 years. We're now there. We've broken it. We're above it. So now you've got to make that decision. Do you want to take it and ride it higher from here? Or we'll take a look at the actual fundamental valuations of the company and say, it's probably still a little bit higher than it should be at the moment, and maybe just take a step back and look at it from that aspect rather than from an emotional perspective. So that's all I wanted to talk about, and that's it. So really pay attention to what's going on. So now, timing of when I think that we are going to look at these gaps getting filled. Now, of course, we already saw that one get filled today. Do we see a cooling off over the next couple of weeks to fill those other two gaps and come back to 218? I truly don't know if those are going to get filled that quickly, but looking into next year, right now we have a jobs market that is not looking healthy. And regardless of what the stock market is doing itself, that is not going to help the underlying issues when it comes to the jobs. Just because the stock market looks good and there's a lot more money flowing into stocks doesn't mean there's a lot more money flowing into the actual companies when it comes to their bottom line. That is a significantly different number. And when you're starting to look at those numbers, if those numbers are not moving up, companies are not going to be hiring more. My company today just announced that they're putting together a committee to decide if they're going to be even hiring for certain positions around the company. So while they're not doing any layoffs or anything like that, if people end up leaving the company or if we're looking to expand, if we're at a point where we're like, hey, we can get by with what we have for help right now, we don't need to add any more jobs, they're not going to. That's typically one of the early on stages of a recession and the jobs market collapsing is companies just not hiring. I saw this happen when I was at Home Depot back in 2007 during the great financial crisis. They just did a hiring freeze and then they started to eliminate a few positions. And the positions that were open, they filled with the people whose positions they were eliminating. And so they kind of filled in the gaps that way. So there was no promoting, there was no hiring. They were just basically shuffling employees around to fill in some gaps and eliminate those positions. And that's how it started. And then they started doing some of the layoffs. So that's kind of what's happening right now. And again, we've been seeing that across all sectors. So it's just really something to pay attention to as there is a separation between the actual stock market moving up and the jobs market and what's actually happening in the economy. Now, with Trump coming on board, based upon the plans that he says he has in place, he is going to be adopting a jobs market that's been kind of sliding in the wrong direction. So, him coming in, if he is actually able to take on and do the things that he wants to do, it's still going to take some time and it's probably going to get worse before it gets better. And based upon the plans that he wants to put in place, there's probably going to be a lot more jobs being lost before there's going to be jobs being gained. And the problem is you're going to be taking a lot of jobs out of the government and you're going to end up shifting those jobs into corporations. The corporate jobs and other jobs for businesses that are out there are going to be generating revenue for the economy that is going to increase the GDP. The jobs that are created for the government do not increase the GDP for the most part. So eliminating those jobs is not going to be good because you're going to see unemployment go up. There's going to be less people with money to spend into those companies. But because of what he's going to end up doing for the companies on tax breaks and things like that, we will eventually hit a bottom and then those companies will be able to start growing again. They'll begin hiring again and we'll see the GDP start going up again. But again, it's going to take some time. And also, that is if Trump is actually going to be able to do what he says he's going to do. All of these questions still have yet to be answered, but the data is all there showing he's going to be inheriting a market that is going to be tough to turn around. So again, these signs are pointing to a lot of that. We could have a very rough 2025 with the jobs market. Don't know how long it's going to last, but eventually we will hit that bottom and we'll turn around and come out of it. And I think we'll be stronger coming out of it and grow. And now, with all that said, going back to the gaps in Tesla, if we do not fill that 218 gap in the next couple of months, I think next year we do end up filling those gaps down below. Could potentially, if the recession gets ugly, get down and fill that $147 gap. Again, don't know if that's truly all going to be playing out. And I don't mean to be super bearish or anything. I'm just being realistic. I'm looking at what we have seen and trends that have happened in the past and saying there's a good chance that these trends are going to happen again. So enjoy these times, enjoy the stock running up. And I do think even if we do come down and fill those gaps, we will get back to all time highs at some point. Even if we don't hit those all time highs this time around, I think we will get there. I think Tesla long term is going to be one of the best companies out there, could end up being one of the best dividend companies out there in the long term future. But as of right now, I think we do still have some time where it's going to get ugly. Even Elon himself said we're going to go through some very difficult times next year when we get this kicked off. So Elon's basically telling us exactly what he's told us in the past. brace yourselves. It's not going to be all sunshine and roses. We're going to be facing some very challenging times. So, challenging times, most likely going to see a lower stock price. Just trying to get you guys prepared for a potential worst case scenario next year. So just be careful about that. Again, none of this is financial advice. I could be entirely wrong on this, but I just want to make sure that you guys are aware that these are potentials that could be going on. And everything we have seen over the last week is strictly an emotional move in the stock price and has nothing to do with fundamentals. Same goes true with Palantir, SoFi, and cryptocurrency. All of this is a sentimental and emotional move in one direction. So again, I don't know what's going to happen with crypto. It may be disconnected. We shall see what is going to happen over the next year. But I do think that we are going to see a tough time next year, and we could see a big pullback in the entire stock market and Tesla coming down to fill those gaps. And I'm looking at that 147 as a worst case scenario gap to get filled at this point right now. So you guys can let me know your thoughts in the comments below. Do you think this is an emotional swing? Do you think we're actually coming back to where the fundamentals should be? Do you think we're going to get these gaps filled? Do you think we're going to hit all-time highs before we come down to fill those gaps? Lots of great questions. Obviously, I know it's all speculation based upon what you guys think. Nobody knows for sure what's actually going to happen until it happens, and we shall see what goes from here. But that's all I've got for you guys today. Thank you so much for watching. I appreciate all of your support. Have a great one.